Hey guys, what is going on with this yo-yo market? Again, sorry for my setup guys, I'm currently away on business, so I'm in a hotel at the moment, but I want to get these videos out to you guys anyway. Now, what is going on with this flip-flop market? So we can see the S&P kind of started fresh out the gates. Let's zoom in on this a little bit here. Let's give you that. And you can see it came straight out of the blocks, kind of rallied around, dropped, almost back to flat, and then straight back up again. What is going on? So we're 0.58% up on the S&P, 0.69 on the Dow. Nasdaq dipped red and then came back green. What's going on? Let's look at the Treasury. We can see the Treasury is now ticked up at 1.547 on the Treasury, which is really interesting. And these are higher than the rates we've seen. You'd have to go back to, I believe it was June time. There you go, June, 1.58 in June. Okay, so these are really high Treasury rates. Now, if you haven't watched my video, I believe it was from yesterday, where I explain what is going on, let me take a few moments to explain that for you guys as well. So we know from that we were getting the investors are now getting worried about persistent inflation and potential rate increases. Okay, so Fed Chairman Jerome Powell has come out and he said the inflation is more persistent than we initially thought, and he started talking in a hawkish tonality, right? He started saying that tapering is imminent, so we know tapering is on the agenda, and we know that his tapering plans will finish around mid-year. He's given away that much information already, and that could potentially open the doors for rate hikes on the back end of 2022, whereas previously people were thinking 2023, but it could be as soon as Q3, Q4 2022. So what happens here is this is how bonds work. So if you imagine, if you have persistent inflation, this erodes your payments from your bonds, okay? So you get a coupon payment on your bond, but if inflation is persistent at 4% and you're getting 1.5% on your treasury bond, you are negative 2.5% in that transaction, right? Over a year, if that's sustained. So what happens is people then buy less bonds, and therefore the yield goes up. That's why we're getting a spike in the yield here, okay? Because bonds prices and yield are inversely related. Now, why are we seeing a rotation out of growth stocks? What's the reason for that? Why are we down on Nasdaq? Why are we, wobbly and almost down on Nasdaq and growth shares over today, and a bit of a wobble today? Well, what happens is when you have a growth stock, and persistent inflation again erodes the cash flows from those companies. Not only that, but if you have persistent inflation, that is often dealt with by the Fed using higher interest rates. But higher interest rates make it more difficult for growth companies to raise capital to grow. And these types of companies need capital to grow. They're not sat on massive balance sheets of cash. They need to go to the market to raise cash to continue their research, investment, and growth. So people rotate out of growth stocks for that reason when yields and inflation start to increase. Now let's take a quick look at the market. We can see Lucid is up over 10%, 11%, absolute tear today. So I might make a separate video on that. Their CEO Peter Rawlinson was on CNBC. He gave some good comments, and the market is taking really positively to it. He's announced they've gone into production in their factory, and that he's given some estimates for what he thinks he can achieve next year, and the market is loving it. Netflix up 4%, Grub up, WBA, Deliveroo, so food companies doing well. Apple, Microsoft, Tesla, Facebook, Amazon all seem to be recovering a little bit some of their losses yesterday, but nothing major. And this market can flip by the time I upload this video because, as we've seen on the spark lines, it's just up and down, green and red, back to green. It's a very unstable market right now, which is trying to pick its direction. But if we sort this in the other direction, you will see something. If we just do that from the worst, you can see a bit of a trend in the ones getting hammered. So you can see Bitcoin play, BTCM, SOS, Bitcoin play, and then SPACs, Matterport, Clove, eHang, SoFi, again Bitcoin Mara, Astra SPAC, Body SPAC, AMC Momentum play, Workhorse Momentum play, Lemonade, high growth stock risk, Palantir, another one of those considered a high growth and rotation out. Okay, so you can see a trend in these, TTCF, Coinbase getting smashed as well, well, what percent? And we can see what's going on here in the market. That's the trend. Now, one thing I want to point to your attention is the following. The highest rate, let this load up, the highest yield we saw this year was back in March. You can see here 1.7 and a 1.745 in March time, okay, March of this year. Now, if we're to look at the S&P for the same period, this is, let's draw some arrows. This is March, okay, and if we draw another arrow, this was also in March. These were the two big dips we saw in the market, okay? And this is where I was doing a lot of my buying, because if you remember, we just had the dip that just kept on giving in these two areas here, okay? And we had to keep topping these levels up because it just kept dipping, and I ran out of cash, but I just kept trying to buy some more, and that was a great opportunity, because if you bought here versus, let's see if we can draw this here. If you bought in at this level versus where we are now, as in at the peak there, it's a 21% increase on just the S&P. But if you were doing that on high growth stocks, you would have done really well. But since then, we didn't get any major dips, okay, compared to these dips. We've had some corrections down, but no major 10% correction down. And now if you look at this, now we're getting close. If you take it on where we are now, that's a 4% correction. Now we're getting tasty, okay? But we're not quite there, because from the highs there, a 10% correction would take you to the EMA ribbon and slightly below it. Okay, so the EMA ribbon is there, 9%, 411. And if we go down to about 10%, you're at about 407. So this is the kind of correction I'm waiting for, because we've not had it for a while. Ever since COVID, if I zoom out, that was the COVID fall there. This has been on an absolute tear. Look at the extension from the EMA ribbon. We're due a correction here. We've not had that since September 20. We've not come near this line. So I can see another, 5 or 6% coming off the S&P here, and I wouldn't be surprised. That doesn't mean I'm not prepared. If it goes upwards and I'm happy with my positions. But if we see these dips, I want to have cash on the side to make sure I can take advantage of these dips, okay guys? Really important. And again, if you're not sure how to invest in an uncertain market, type in my name, Ijaz, type in uncertain market. A video should pop up where I discuss my strategies and how I think in an uncertain market and what I do to prepare, okay? So again, these are the moments I'm looking for. Let's look at the prices. We're not super cheap just yet, right? Actually, let's do this on the charts here. We're not at the super tasty levels yet. I mean, let's go into Tesla as an example. And let's just look at the pricing we were in March. Okay, so look at March. You were picking up Tesla in 540s, easily in the 500s, right? With the number beginning with 5. We're now at 780 on Tesla. Okay, so you're not picking up Tesla at the prices we were at there. But a correction back down to here would get you a 645, which is far more tasty to get into. End phase. I was nibbling in at around the 120 mark, I believe. Let's check that in March. Yep, 130 is not quite 120. 120s you had in this dip in May, which was the second dip. But if the first month, 130s. Again, not quite there yet, although end phase is one that has rotated down, and I've started nibbling on this, okay? So I have been adding to my end phase position, even though it's quite large already. Lemonade, another one I've been adding to, but look, still not super cheap for me to go really heavy on. Oops, let me zoom back out. Where's our March? So March levels, again 80, and then you had a dip in May of 62. That's where I was building up a lot of my position, and I'm happy to be buying again at Lemonade because we're getting back to these levels on Lemonade. Good example. Square, I don't think this one is as cheap as it was in March. Again, let's go back to March. You were getting Square at 200. In this dip, you're getting 195. So we're rotating down a little bit now on Square. So if you didn't get a position, we got a good dip here. Exactly what I said. Coming down to this EMA, this is a nice correction, nice dip to start building up a position in Square if you haven't. I might start topping up a little bit more, though I've got a good Square position. Roku is another one that's come down a lot. And again, I'm happy to bring my cost basis down and build out a bigger position in Roku. And I added to that today. Palantir, I think Palantir's been on a bit of a run. Again, not as cheap as we could have had it. Palantir's been much cheaper. So this has some more dipping to do before I add into Palantir. Lucid is the same. It's been on a bit of a run. So yeah, you could have had Lucid at 17, 18, 19 during the lockup period. I certainly won't be chasing this in the 27s. I'm happy with my position in Lucid. So you can see that's the state of the market. And that's what I'd be doing now if I was you guys, is I'd start going through my favorite stocks and looking at the kind of levels you saw in March and get an idea of, is it cheap? Because I think there's a few more layers to go. That doesn't mean you just rely on that, guys. This market could flip, go up, and never come back. So get your positions right. Start nibbling. Could never squander a red day. If there's a red day, top up your positions of those where you have high conviction in. But don't go too heavy just yet. Just in case there's a little bit more, hold back a little bit so you can go deeper if the dip goes deeper. Thanks for watching, guys. Hope this video was useful. Again, excuse the lighting, excuse the sound. I just wanted to get this video to you in a timely manner as I'm away for a couple of days traveling on business. But anyways, I hope you guys found this useful. If you like this type of video, please don't forget to hit the like button and subscribe. And I'll see you in the next one.